Distinguished guests, ladies and gentlemen, good morning.
Good morning.
It's really nice to be here before you. And on behalf of the Central Bank of Kenya, let me join my colleagues in welcoming you to this workshop aimed at developing a strategy to enhance financial inclusion in the COMESA region. The strategy will be underpinned by an enabling regulatory and supervisory framework for microfinance institutions. And I understand that the strategy is based on the proceedings of the microfinance training course for policy and development, which was held in December 2014 in Lusaka. At the outset, let me commend the COMESA Monetary Institute, the African Development Bank, and the Lions Foundation for the work done so far. I would add that courage is good, courage is needed, but vision is essential. And in this, I think you are the visionaries. There's that story of Isaac Newton when somebody asked him, how could you have come up with this brilliant laws of physics? How could you? And he said, well, I could see far because I stood on the shoulders of giants. So let the generations that come after us say that they saw far because they stood on your shoulders. They actually took your vision and implemented it. And that's why we've moved so far in such a short period. So establishing a financial inclusion ecosystem that does not marginalize people on the basis of income or geographical location has become a policy concern for many countries, including COMESA member countries. Financial inclusion has gained traction over the recent years as a priority area for policymakers and regulators within the financial services sector. The various initiatives that have been undertaken by different stakeholders to enhance access and usage of formal financial services have led to a significant reduction in the global population that is financially excluded. The Global Findex report of 2014, spearheaded by the World Bank, estimates that between 2011 and 2014, the number of adults without a bank account dropped by 20% to 2 billion. The enhanced access is attributed largely to a significant growth in account penetration and innovations in technology, especially mobile money and agency banking. You're obviously aware about the World Bank's objective of universal financial inclusion by 2020. In Kenya, the outcomes of the various initiatives, some of which will be highlighted in this workshop, have been remarkable. Noteworthy progress includes the increase in the bank population from 24% to 67% between 2006 and 2013, as highlighted by the FinAccess survey conducted by the FSD Kenya. A geospatial survey that was conducted in 2013 also estimates that 76.7% of the Kenyan population is within a 5-kilometer radius of a financial access point. However, despite the noticeable progress in recent years, 25% of the Kenyan population still remains unbanked. And we would insist that with time, and we are at that point in Kenya, the emphasis should shift away from just numbers, but rather to quality of service. And in this and other objectives, and in this, I hope our Kenyan colleagues will explain to you a new initiative that we are about to launch, the Emma Keeper, through which we hope to increase savings, in fact, transform the way savings are done by the middle class and lower class. and I'll leave the details to the Kenyan colleagues to explain that to you. The existence of national strategies that promote financial inclusion are critical to enhancing access to a diverse range of financial products to the unbanked in Kenya. The mandate of the government to enhance the deepening of financial markets by fostering access, efficiency, and stability is captured under Kenya's Vision 2030. The central bank's approach to achieving its role under Vision 2030 is centered on the promotion of an enabling legal and regulatory framework that fosters the development of a diverse range of financial service providers while guaranteeing its dual mandate of financial stability and financial integrity. Central to this objective has been the licensing and regulation of microfinance banks. The first microfinance bank in Kenya was licensed in 2009. This paved the way for 11 other microfinance banks which have been licensed to date. The 12 licensed microfinance banks have made a significant contribution to financial inclusion in Kenya. This is evidenced by the number of active deposit and loan accounts as at December 2015, which were 932,000 and 342,000 respectively. In value terms, this represents something like Kenya shillings 40.5 billion in deposits and Kenya shillings 46.9 billion in advances. Further, microfinance banks have a footprint of 1,009 branches and 1,154 agents as of December 2015. While commendable achievements have been made in the past 6 years, the microfinance sector in Kenya still has considerable opportunities and challenges that institutions need to tackle in order to realize their full potential. Key amongst these challenges include the high cost of credit, inadequate products and services, and weak consumer protection frameworks. Microfinance institutions must be willing to make a difference if the full benefits of microfinance and financial inclusion are to be realized. Microfinance institutions must be prepared to employ innovative delivery channels to reduce their operational costs and thereby enhance their reach and efficiency. An essential element in this process is recognizing the characteristics of the consumers that these institutions serve and tailoring lending mechanisms to meet these situations or their situations. And in this, I have to say, I still do not have a good picture of the customers, meaning the people that come are served at microfinance institutions. But it seems to me, roughly, they have an interesting characteristic. To begin with, they are very close to the institutions, the managers and so forth, which in that sense, it's a new meaning to know your customer, because they really know their customer. They know what they get paid in, what products they're moving, what days and all that, but also other things. So we need to, they could be, for instance, a lot of them are women, a lot of them are small enterprises that don't have much in terms of security. So that picture needs to come out. And in so doing, you will then tailor the lending instruments that best fit the customer. Policymakers, on their part, should support the development of appropriate support infrastructure to facilitate the last mile delivery of suitable financial services. Therefore, the development of proportionate risk-based regulations by policymakers is critical to guaranteeing the development of a dynamic, robust, and sustainable microfinance framework for our country. The starting point towards this collaborative structure is a consultative process to developing a forward-looking framework for regulation and supervision of microfinance institutions. developing laws and regulations that facilitate financial inclusion, and the involvement of diverse institutions in the microfinance sector will go a long way to enhance provision of diversified microfinance services in a sustainable basis for the economically active poor and low-income households. Ladies and gentlemen, my task this morning is to challenge you. And as I conclude, my expectation is that the ideas to be presented and discussed over the next few days will form the basis for development of robust and sustainable national strategies for microfinance. I hope that by the end of this workshop, you will have come up with a model COMESA strategy for microfinance regulation and supervision that will enhance financial inclusion in the region. Such a model strategy will not only provide a yardstick for microfinance regulation and supervision, but will also go a long way in the harmonization and convergence of these practices, and ultimately contribute to monetary integration in the COMESA region. You have an opportunity to share experiences and access a range of novel policy interventions that allow the unlocking of the benefits of financial services innovations. I wish you a very fruitful deliberations over the next few days, and I look forward to the outcomes of your deliberations. Thank you very much.